Joining us now for more on the markets, Jim Paulsen, Chief Investment Strategist at the Luthold Group. And I think if I could sum up your thoughts, Jim, the upside surprises keep coming for you, which puts a nice base underneath the market for maybe future advances. Anything on the horizon, policy-wise or Fed-wise, that gives you pause?
Well, ultimately, Joe, the policies are going to turn more restrictive, but I still think that's probably later in the year and maybe even mostly a next year event. The Fed and Treasury officials are really slow here to back off the juice, and I think they're going to continue to be that. Probably mostly that'll become more of a next year issue. But I think right now people are just having trouble catching up with the aggressive and positive surprises that keep coming out on economic and earnings front almost every day. They raise their estimates, but then those estimates get beat. And every day your estimates get surpassed. You have to raise your earnings estimates. You have to raise your target prices on the market, and it kind of continues to be a upward force for the stock market. We'll eventually catch up to the reality, but I think it's really been hard here because things have changed so quickly.
You were an early hawk on inflation, and I used to needle you about that. And you were so early, and you did it for so long, and it didn't happen, that you finally gave up. That's all I can figure, that you're looking at the world today and what we're proposing and what we're seeing, and I'm not hearing it from you. What happened? You got burned by being too early, so now you're going to miss it, maybe.
Well, maybe. I'm not convinced either way that we're going to have runaway inflation or we're not going to have, Joe. I'm not so worried about a burst of inflation, which we are going to have. We're in the midst of that now. I'm more concerned about sustained inflation, and I think that's still a real risk. That could prematurely end this recovery and its bull market. And I'm still on the fence on that, but I got to tell you, I'm leaning a little towards the view that we're going to get a burst of inflation and then maybe it calms down again. Most of the focus is on policy juice, and I get that. And policy has been overused and abused. Maybe we have more aggressive policy than ever before in our history. And typically that will heat the economy and lead to potential overheat problems. But we also have a lot of disinflationary force out there, and a very big difference between today and the 1970s. We have an aging and old demographic. We have a very slow-growing labor force. Well, you're a great example of that, Joe. I'm still sort of on the younger side, but that's in the 1970s we had 2.5% labor force growth, and we only have 1% today. I just don't think it's the same kind of situation. I kind of think we're going to have an improvement in technology, Joe, coming up after the big tech run we've had in the last several years, which will help. This is a much more open economy today than what we had entering into the 1970s before, much more competitive economy today. Back then it was led by automobiles, where sticker prices went up every year, and today it's led by technology, where sticker prices go down every year. There's just a whole set of different forces that existed in the 1970s that really is what maybe was responsible for runaway inflation. We don't have that.
Shepard Smith here. Thanks for watching CNBC on YouTube.